If you invest in stocks, securities, or cryptocurrency, you're really going to want to watch this video till the end because it could both help you avoid a nasty tax trap and also make sure you don't miss out on an opportunity due to a misapprehension of the law. What I'm talking about is something called wash sales. Now, you might not know what this term is, so I'll explain it using a quick hypothetical. Let's say that you bought 1,000 shares of StarBucks stock on December 13th, 2017. The stock price was $60 per share, so for a total of $60,000. Now, on July 1st, 2018, you see that the stock has dropped to $48 a share, meaning if you sold today, you'd have a loss of $12,000. Now, you have some other stocks that have done well, so you're looking for a way to lower your tax bill. So you think to yourself, hey, you know what I could do? I could sell my Starbucks stock, realize that loss, immediately buy it back to maintain my market position, as I think the stock is going to rebound. And it sounds like a pretty good plan. You just apply those losses to any gains you have. And it sounds like it should work. Can you think of any problems with this? Well, this is where having a little bit of knowledge of the tax code will really pay off, because that's technically known as a wash sale, and it's a big no-no from the IRS. Wash sales are prohibited by Section 1091 of the Internal Revenue Code. Section 1091 states that you need a 30-day lag between selling and buying a stock back. Otherwise, the loss that occurred will not be deductible. Now, because it's a 30-day lag on both ends, you actually have to wait 61 days before buying a stock back in order to be able to fully claim your loss. Otherwise, you lose twice. Well, once on the decrease in the value of the stock, and then you lose again when the IRS won't give you credit for the loss you actually suffered. Does this sound fair to you? So, can you use wash sales to utilize cryptocurrency losses? Cryptocurrencies are a bit volatile, and because of this, a lot of people are sitting on gains. They're also sitting on large losses. So the question is, can you sell the cryptos that have lost value to apply those losses against gains in order to lower your tax bill? And also, can you then immediately buy them back so that you maintain the position that you desire? The answer is probably yes. Section 1091, as it is now, it does not apply to cryptocurrencies. Now, will the IRS change its mind? Probably. There's a lot of money to be had. The IRS can change this rule by changing its definition of what stocks or securities mean. If it says stocks or security also means cryptocurrency, then 1091 applies and it would be a wash sale. But that's not what it is right now. Currently, the IRS considers cryptocurrencies to be taxed as property, even though the Securities and Exchange Commission considers some cryptocurrencies, your ICOs, and other cryptocurrencies that require a third-party promoter to be securities. Yet it's conceivable that the tax treatment actually gets worse. The IRS could deem cryptocurrencies to be personal property. What this means is that capital losses you just can't apply, like a car or boat or your house. But I can tell you this, it's not entirely consistent because if you did have a car, let's say you had a car that did appreciate a lot. Let's say you have a Ferrari GT250 that you bought a couple years ago for a steal at a couple $100,000. Well, let me tell you something. If you sold that for a $13 million price tag, which is about what they're going for, the IRS would certainly be interested in the gain you have. So what do you think of the wash sale rule? Do you think it's kind of messed up? If it applies to securities, why shouldn't it apply to cryptocurrencies? Do you think the IRS will change its mind and start to prohibit wash sales on cryptocurrencies? Do you think it matters that the IRS has already declared cryptos to be taxed as property, not securities? Would you just prefer it if the IRS went away? Leave your comments below, and I want to tell you, I read every comment. We get some great feedback from our viewers, which help us create better videos. So if you think you might have a comment to leave, please leave it. Don't forget to like this video, but only if you like it. If you merely tolerated it, that doesn't sound like a lot of like, now does it? And here's something you might else want to do. You might want to subscribe to the channel by clicking on the parent and parent logo so that you can get the best possible tax updates in the world. And let me tell you, not only will you feel smarter once you subscribe, you're going to be smarter. This is Anthony Parent of Parent and Parent LLP IRS Medic. Thanks for watching.